What if I told you that the stock market's next move could hinge on a diplomatic negotiation happening thousands of miles away? Let me break this down for you. Right now, S&P 500 futures are inching lower, but not because of some economic crisis. No, it's geopolitical chess. The US and Iran are dancing around a deal to reopen the Strait of Hormuz, and traders are sweating bullets. Why? Because this isn't just about oil tankers. It's about the entire global economy holding its breath. You see, when the strait is closed, oil prices spike, and that sends shockwaves through everything from gas pumps to your retirement portfolio. But here's the kicker. Iran just denied even talking to the US, and Trump's throwing shade by saying they're only semi-negotiating. That's not a confidence booster for markets. Personally, I think this is a masterclass in how fragile global stability is. One tweet, one denied meeting, and suddenly the Dow's futures are down 0.2%. It's wild how much power a single geopolitical misstep can have on your 401k. Now let's talk about oil. Prices are up 1% to $79 a barrel, which feels like a small victory for traders, but it's also a red flag. Higher oil prices mean higher costs for everything: your commute, your groceries, even the energy that powers your phone. And yet, the stock market had a winning week last week. How's that possible? Because investors are betting on the Federal Reserve holding off on rate hikes. The July jobs report showed a contraction, which is a rare silver lining. But wait, this isn't just about the Federal. What many people don't realize is that the economy is in a weird limbo. On one hand, fewer jobs mean slower growth, but on the other, lower rates could fuel a rally. It's like walking a tightrope while the world's most powerful countries argue over a strait. From my perspective, the market is trying to hedge its bets, but it's a gamble with no clear exit strategy. And then there's the bigger picture. The Strait of Hormuz isn't just a shipping lane. It's a symbol of how interconnected our world is. A deal here could ease tensions, but no deal? Well, that's a powder keg. What makes this really interesting is how quickly markets react to whispers of diplomacy. Last week, Treasury Secretary Bessent hinted at a deal, and suddenly everyone was bullish. Now that Iran's denying talks, the mood's soured. It's like watching a movie where the plot twists every hour. If you take a step back, this isn't just about oil or stocks, it's about how much we rely on fragile systems. A detail I find fascinating is how traders are using every scrap of news to predict the future. Yet the real future is still written in the sand of a Persian Gulf Strait. This raises a deeper question. How long can we keep building our economies on the assumption that global chaos won't disrupt us? Because right now, the answer feels like not long. So where do we go from here? The market's in a holding pattern, waiting for either a deal or a disaster. The Fed's September meeting looms, and inflation data this week could tip the scales. But honestly, the real wild card is the Iran situation. If the US and Iran can't agree, oil prices could skyrocket, and that would be a nightmare for consumers. But if they do strike a deal, the market might surge again. Either way, it's a reminder that no matter how sophisticated our financial systems are, they're still built on the same old human factors: distrust, brinkmanship, and the hope that someone somewhere will make the right call. What's your take? Are we heading for another geopolitical roller coaster? Or is this just a blip? Let me know in the comments. I'm curious to hear your thoughts.